one pack of stocks which is doing very well again in trade today. You have the defense pack in focus. Look at a BEL, look at a Cochin Shipyard, look at a Garden Reach up 11.5%. Garden Reach, HAL also up 4+% in trade. You also had Rajnath Singh, the defense minister, talk about further strengthening the domestic defense manufacturing and boosting exports to unprecedented highs. Now, this comes at a point when, in any case, you have some of these defense stocks trading at decently high and elevated valuations, relative valuations. Let me put it that way. Dharmesh, your sense with regard to the whole defense pack at this point? Just this comment coming in from the defense minister. What's your sense with regard to defense as a play as of now, just in terms of both execution and valuations?
Yes, I mean, we were very constructive on this play, and that's the reason why we have included defense stocks in our budget theme as well. And both HAL is there, and one of our initiating coverage D6 system is there. See, the reason why we were still constructive on the defense stocks in spite of it being traded at multi-year high valuation multiples was that there has been a conceptual shift for the defense companies as far as the way, the type of business they are getting. Earlier, it was IOP kind of a partners for Indian defense companies, that is Indian offset partners. So around 30% of the component which India was sourcing from overseas was being made in India, but it was not actually made in India. It was more of an assembly kind of a system, assembly, packaging, testing, and the product was given back to that company, and the finished product used to come to India. It can be anything: artillery, aircraft, helicopters, tanks, and things like that. With Make in India concept, what government has did a change is now you have to transfer the technology for that product to be manufactured in India. And there are 3 stages: 1, 2, 3, 30%, 40%, and 50%. So on an average, the new deals which these companies are doing, basically the government companies, when the government is sourcing a product from overseas, so they have to tie up with an Indian company, and then this percentage has to be manufactured in India. The beauty of that is the technology transfer is also happening. And eventually the 100% will have to come to Indian companies to be manufactured, and those companies will take the royalty premium kind of a thing. And that's the reason why we are seeing this blue sky kind of an environment for most of the defense companies like HL. The entire LCA, like that is light combat aircraft or light combat helicopters, will be manufactured in India. The Rafale deal has been in light with the same 7 to 8 years hence forward. It is going to happen like that. So as of now, order book is going well. The 12-13% kind of a revenue run rate is there. But if you have looked at the operating margins, they have swelled 200 to 300 basis points. And this was not because of low input prices. This is because the product, they have now shifted from services maintenance to product kind of companies. And that is helping. So again, my only sincere advice would be very kind to selection of criteria. Be strict with your procedures when you are buying a defense company. But this is an unfolding story. So this kind of a premium valuation may continue for 2-3 years kind of a time frame. Our top pick in the system is HAL, that is HL, and DCX system.